Hello and welcome back to the Art of Finance. In this video today, I'll be discussing the pros and cons of the big three brokerage platforms in the UK being Trading 212, Hargreaves Lansdown and Vanguard UK. Deciding which platform is the best is dependent on the type of investor you are. There are many different types of investors out there, each with their different goals. There are day traders, cryptocurrency investors, CFD trading, long-term investors, the list goes on. I'll be focusing on long-term investing as this channel is documenting my journey in passive investing for long-term gains. If you are a beginner, this is a great place to start as it's fairly safe and the risk of losing your hard-earned cash is limited compared to other investing styles such as day trading. If you are an active investor, this isn't the video for you unfortunately, as these platforms aren't optimized for an active investor such as Fidelity. If you are looking to invest in a couple of solid investments over the long term with a less hands-on approach, this video is for you. For each platform, it's vital to ensure the brokerage offers an ISA stocks and shares account. I will create an in-depth video about ISA stocks and shares in a future video. To give a quick overview of what an ISA is, ISA stands for Individual Saving Account, a form of UK investing that is exempt from tax on its returns. Stocks and shares ISAs allows you to invest in qualified investments, typically cash, shares, bonds, unit trusts or funds, and do not incur income or capital gains tax. The money that you can invest in ISAs each year is limited, currently £20,000. The total permitted amount typically changes each year. In the UK, we are subjected to a capital gains tax if our investments are not held in an ISA. A capital gains tax is a tax on the profit realized on the sale of a non-inventory asset. The most common capital gains tax are realized from the sales of stocks, bonds, precious metals, real estate and property. Investing in an ISA allows you to buy and sell without receiving a 10% capital gains tax for a basic taxpayer or 20% if you're in a higher tax bracket. Here's a quick example of how this works. Your taxable income minus your personal allowance and any income tax reliefs is £20,000 and your taxable gains are £12,600. Your gains are not from residual property. First, deduct the capital gains tax-free allowance from your taxable gains. For the year 2020 to 2021 tax year, the allowance is £12,300, which leaves you £300 to pay on. Add this to your taxable income. Because you combined the amount of £20,000 and £600 is less than £37,500, which is the basic band for 2020 to 2021, you pay capital tax gain at 10%. This means you pay a total of £30 of capital gains tax. Now that you understand why ISAs are extremely important in the UK, we can look deep into the free online brokerage platforms. Each platform offers an ISA and stocks and shares account, which is brilliant. Before investing a penny into an account, we need to make sure that our money is safe. In the UK, the FCSC stands for Financial Service Compensation Schemes. The Financial Services Compensation Scheme in the UK's Deposit Insurance and Investors Compensation Scheme for customers of authorised financial services firms. This means that the FSCS can pay compensation if a firm is unable to or unable to pay its claims against, generally covering up to £85,000. Each broker, Vanguard, Hargreaves Lansdown and Trading 212 are covered by the FSCS, so your money is secured if anything happens to the online brokerage. Now that we have the essentials out of the way, we can take a look into each platform to decide which platform is right for you. Hargreaves Lansdown is a well-respected industry leader and an award-winning investment product and service provider which has been in operation for over 35 years. This leads to a natural trust and peace of mind. It offers many services across its platform such as ISAs, index fund, ETFs, a large range of stocks, SIPs and general saving accounts are offered alongside more specialist products like the Active Saving Account, Venture Capitalist Trust and Contract for Difference. The platform provides excellent and easy to follow company fundamentals and technical research, such as a dividend yield and performance history. This allows investors to track companies to invest in before making an important decision. The customer service of Hargreaves Lansdown has a quick and responsive team that deals with any issues that can easily be resolved by phone or email. There are also numerous finance professionals and fund managers taking care of your specific financial needs. One of the biggest cons of Hargreaves Lansdown are the fees. They have expensive fees for single trades of up to £12.95, while there are commission charges, high exit fees, and hefty foreign exchange rates. Good luck buying overseas stock, as this can cost you over £30 in fees. A reason for high fees is due to the excellent and up-to-date resources that come with the platform. The platform can be updated with design made for more user-friendly for beginners, and the information given can be quite intimidating. Vanguard keeps fees very, very low. Keeping the expenses at an industry low is the meat and bones of Vanguard. Their average annual mutual fund expense is almost 1% lower than the industry average. While a single percent point may seem insignificant to you, consider that it can save you tens and thousands of dollars in fees throughout a long-term investment. This gives investors a chance to maximize compounding and growth over a long period of time without being exposed to high maintenance fees. Unlike some investors and trading sites, Vanguard doesn't bombard you with stock tickets and overused screen space. Once you purchase a fund or stock, it is easy to find performance tracking options to monitor your investments. With their tools, you can track the investments, performances, taxes, and asset allocation in seconds via the Overview tab. Investment trackers are passive funds that aim to mirror performance of selected stock market index, such as the S&P 500 and FTSE 100. This is done by Vanguard buying shares in proportions to replicate the index. So rather than an individual investor to purchase all the shares necessary, which could be extremely expensive and tedious, Vanguard offers these index so that you can invest in and benefit from the tracked index performance. This is a great passive investment with a hands-off approach to investing, great for beginners, long-term investors. This allows for automatic diversification, which makes it a very, very safe investment. A major disadvantage to Vanguard is that they don't offer individual stocks to purchase. If you are a more seasoned investor and would like to invest in single companies such as Tesla, well, you don't have the option. This limits the investor to purchase in Vanguard's mutual funds, index, and ETFs. Trading 212. Trading 212 provides the greatest advantage with a commission-free stock and ETFs. This is amazing for investors who want to get started with a small amount of money. Fees here isn't an issue at all, as all trades are free. The platform is fully online, straightforward, and quick. Trading 212's web and mobile trading platforms are easy to use and well designed for any investor. It also offers demo accounts for CFD trading, which is a bonus. This allows investors to try the platform and practice investing with virtual money. This allows the investor to familiarize themselves with the platform before deciding on what to invest in. A major negative, though, is that the product portfolio is limited and popular asset classes like options or bonds are missing. Many of the main companies are available on their website, but it is very limited in comparison to Hargreaves Lansdown, where they have the full list of companies that are available to purchase in the UK. The research tools for fundamental analysis are also quite basic. Now that you know the pros and cons of each platform, what will you decide on depending on your goals? I personally use Vanguard to purchase index funds and ETFs, such as the S&P 500 and the FTSE 100 in their stocks and shares ISA account. In conjunction, I use Trading 212 as I benefit from the zero commission trades from single stock purchasing. I personally have my bulk invested in Vanguard, where I can forget about my investment knowing that it's well diversified and isn't heavily affected by day-to-day news. Trading 212 is excellent for my drip feeding strategy, as there are no commission fees. This allows me to save on the fees that I would have to pay if I was to use Hargreaves Lansdown. It's all about optimizing your investments and saving where you can. Remember, fees are the hidden payments that can diminish your returns without you even noticing it. I will make a video in depth about what drip feeding is and how it can be utilized. I hope this video has been informative and helpful when deciding what platform to open with your ISA. If you want to get started in trading 212, please use my link in the description to get a free stock up to £100. This has been The Art of Finance. Peace.